Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Thursday, 18th of July. Definitely, the markets are still continuing lower. We are seeing weakness in the Nasdaq as usual, same as yesterday. But we are also seeing some ES, some S&P and Russell sell-offs because I think the Feds are basically bringing up a lot of concerns regarding the cooling job market. Fed's Goldsby today said that the cooling job market is definitely an area of concern, but at the same time, this is what the path to 2% inflation looks like. We are seeing more and more inflation going down, other sectors going down. We are seeing now cooling job market because basically initial jobless claims came higher than expected, 243,000 instead of the 230,000 expected, and also continuing jobless claims. So these two areas for the Fed, it's actually good. This is a check in the right direction, but for the markets, obviously a cooler job market, labor market, a cooler inflation, cooler prices, lower prices, this is going to affect earnings. At some point, this unbelievable growth in the market has to stop because right now we are against the inflation, against these high prices that are unsustainable for the economy. At the same time, Philly Fed business conditions came in higher than expected, 38.7. Businesses are still doing good. New orders came higher than expected. Employment are catching a bit. So it's 50-50. Some areas of the market, of the economy, are cooling down, labor market, housing market, but there are some other indicators that support strong economy. That's why the US is leading the worldwide economy instead of in terms of strength, and why the Fed it's not getting in a rush to really cut interest rates. So right now we are still pricing in with 93% of probability an interest rate cut in September. I think that's most probable outcome, but look at this, 60% of probability for a November rate cut and another 53% for December rate cut. We have 3 rate cuts. I don't think that's going to happen. I don't think the US is so under control that Fed will warrant 3 interest rate cuts. I think September it's pretty probable, but more than that, I will just wait for September cut and then see how the markets react, how the data is coming, how the minutes of the FOMC, things like that. Apart from that, we are continuing seeing earnings. Today we got TSMC, the biggest semiconductor manufacturer, and after the close we are seeing Netflix. And oh boy, this TSMC second quarter profit beats with expectations of continuation of the AI chip boom. This is basically why Nvidia today and all these AI stocks, we are going to see that into the charts. Today we are catching a bit, not as yesterday, but we are somehow supporting a little bit of the Nasdaq, but still weakness overall, because this is going beyond 1 or 2 companies that are reporting earnings. This is going for geopolitical concerns, for more restrictions, more bans on exports to China. Still, TSMC reported net revenue of 40% plus from a year ago. Explosive demand for AI stretching chip supplies, and they are also thinking that the supply continues to be pretty tight all the way through 2025. So they have a big cut of that apple, that pie. The chip giant currently produces 3 nanometer chips, really advanced, and they are going to 2 nanometer in 2025, and they project between 22 and 23 billion compared with the 17 billion posted in the same period a year ago. So TSMC, really strong numbers, really strong demand, and they are a pretty big I think is the most important supplier of semiconductors. Now that we reviewed the fundamentals, now let's go to what you all want. Levels, levels, and levels. And yesterday, I told you that this area here was pretty interesting. At some point after this huge sell-off, we were going to see some kind of relief bounce, dead cat bounce, whatever you call. I have here two levels. This is a 15-minute chart. I have two levels here. This is the blue line and also this pivot. In between, this was the area in which if we started to see going higher and break this descending trend, I would be more bullish. But as you can see, we never went near that. We just started to see some sellers in this first area of resistance, in the first inverse fair value gap for the 5 and the 15, and we never took this liquidity up here. A lot of weakness, and as you can see, one trade for me into before the open, because basically I was watching this descending into pre-market low, and also we opened with a gap, a little gap of basically, I think it was from 24, it was just like 7 points of gap, but still a gap, because Nvidia and Meta were opening quite strong. Actually, they are both the only one that are holding somehow, Nvidia and Meta. So this gap was holding throughout all the overnight. We were watching this descending, and you know my setup, right? The setup is pre-market lows, manipulation move lower, rejection of lower pricing, and a big push higher with an imbalance. The imbalance was this inverse, this bullish fair value gap into this inverse. I'm just not drawing the inverse. Let's just focus on the bullish fair value gap. The first entry of this is quite tricky, because let me just explain you why I took this entry instead of this one. I actually was having a limit order up here, stop order there. But when I saw this one, obviously this offers less risk. With the stop is the same. It's the low of this candle that makes the imbalance. So I actually got an entry in, I got triggered in here, and with a stop down here, it's just 12 points of risk. $240 for, I was watching two areas of interest. The first was this pivot that you can see here, and also this inverse fair value gap on the 5-minute. The 50% of that being exactly this. At this point in here, I put my stop on profit here, because with this market, you never know. When you try to trade overnight in this environment in which there's sellers everywhere right now, I just don't want to have a green trade now transform into a red trade. So basically at this level, I was with the stop down here, pretty covered by all these people here, but still we pull back, and then with a nice consolidation, we tried for the second liquidity. And I got out at this level, at this pivot. I was maybe in some other circumstances, I would just hold for this pivot, but right now, see profit, take profit, 82 points. It's just $1,600 for the account. Now, the open. We open, and as always, we just sold off. This was the manipulation and the big setup for shorts. I'm not confident. I'm not usually a bear, but I'm more of a bull long term and a bull whenever I can. But this was a nice setup for shorts. We tapped again the pre-market low, and then the sell-off continued. Continue. And if we change to the 15-minute chart, we just broke, bounced a little bit, and then broke for everything. Let's now open our eyes, zoom out, because we have pivots in here, and also down here. Down here, I think we will see a lot of buyers down here at 19,720, because there's a big pivot on the 1 hour. We have all these guys here. All this area is consolidation prior to the big squeeze to the upside, but this is a 1 hour chart, and I'm sure you and me, we can all agree that this zone is going to be quite interesting for a lot of swing traders, maybe bigger positions, maybe to take some dollar cost average into another move for all-time highs later into the summer. Who knows? But I'm sure low 70, 720 is going to be key. I have also this imbalance here, which we already got at 19,811, and this blue dot line is last week low. Last week high was here, last week low here, and the confluence down here is giving Nasdaq a little bit of a breather. But as you can see, this was the last liquidity. We have the last week low, and then we were starting to somehow trying to find some bids. But then again, sellers are still channeling trends whenever they come. So I'm not super confident. I would like the Nasdaq, honestly, to take these 720s. Let me just go zoom out. These 720s, I would really like Nasdaq to really destroy the big one and then try to find structure in here for the breakout. That's my style of trading. We need liquidity down here, and the 1 hour is pretty clear. It's quite visual that we are going to see a lot of buyers in this zone of between 700s and 500s. And that's what I'm waiting. You can see I still have the range POC, the point of control. We are still here. This is a big zone, guys. Whenever we trade so near to the point of control, we just have to pay attention. We might do this, and break out, or we might bounce, reject, and then go lower. This point of control is going to be super pivotal. It has a lot of volume since the range that we are managing here. Let me just try to show you. It's from this pivot. From this pivot, we have the range on the volume profile. You can see how from last week high, this blue dot line, there's a lot of volume up here, most probably shorts or longs trapped, but basically a lot of shorts were up here. We are now starting to see a move towards the second area of volume, in this case, point of control. So we have two options. Either we bounce and we retest this zone and shorts recommit, or we just continue lower, reject, shorts recommit, and then continue lower. This point of control is going to be, for me this week, the most important level. That is 20,007. So you have a lot of confluence here. You have the psychological 20,000 level. You have volume from the big push higher that we failed. So patience is what we need. We need patience to really see big levels. Let's just change to the 4 hour. Big levels being taken. The big level being taken, it's down here. This is so visual that I wouldn't like to commit too long in a day in which we don't take that. Once we take this level, I'm sure that whenever we go down, we will find buyers that will try to push the Nasdaq in a big move and maybe reclaim the 20,000s and continue higher for new volume nodes like these ones. So patience. This week, tomorrow is Friday's options expirations. This week's been a lot of red. Let's just see how we are dealing with it on the weekly. Look at this. This is insane. So we have a weekly imbalance here. 1, 2, and 3 weeks. This is the level. This is the 19,700s that I would like to see taken. On the daily, we are also tapping this pivot, and there's a daily bullish fair value gap. So there's a lot of things down here, but we have to be patient because right now the Nasdaq, as you can see, the trend it's choppy but still there. Nasdaq is not prepared. This is not powerful buyers. This is not big pockets investment. These are just people who basically want to day trade, and that's all. We want the big money in our side. And I think that's going to happen down there around 19,726. As I told you, the Nvidia is 2% in the green, Meta 3%, ASML it's having a little bit of issues, AMD 3%, AVGO it's holding the breath. But the most interesting part, apart from the continuation lower to the Nasdaq, it's the Russell. The Russell tried to continue higher and then got demolished. 2% in the red, with basically the dollar and yields pushing higher, means that I'm seeing a little bit of fear of perhaps some recession. Who knows? Metals are also in the red. As you can see, gold is 0%, 0.33, but looks super bearish. Copper, Dr. Copper, one of the hearts of the economy, it's 3.50 in the red. Huge day for metals to the downside. Financials is minus 1%. Everything is being destroyed. KRE, regional banks, JP Morgan, Bank of America. So today it's quite a bad day overall. Overall, we are not seeing a lot of, actually, let me just show you the heat map because I think today is not a good day. As you can see today, it's bad. Today is just, it's not as yesterday because we saw continuation because of news on the semiconductor sectors and things like that. Today it's the broad market is just red. Everything is red. Commercial, Visa, Amazon, retails, technology services, technology, electronics, finance, health, technology, Lily, everything. Perhaps a little bit of energy. ExxonMobil, 1%, but as you can see, it's quite clear. And you can also see that on the RSP that is in the red and how we are seeing this blip lower in the momentum indicators and also the percentage of stocks above their moving average. Obviously, we had a pretty big run in all three metrics. We had momentum, we had trend, we have long term. So it's good to see a pullback. I would like for the RSP to hold the all-time highs at 170. I wouldn't like to see something like this. That would be a disaster. So a little bit of a pullback on the broader sectors. As you can see, the market is quite red everywhere. So be smart, and be patient. We have our levels. I will be watching down here because we have some key levels that need to be taken, some liquidity that perhaps needs to be tapped, and then for a manipulation move, I would like to really see that for maybe a reversal. But first, we need to take levels, liquidity, structure, and then price action. Until then, I'm going to sit tight. I'm going to take some scalps. I'm going to manage my risk as usual to the extreme in this market. Longs are not welcomed in this environment right now. So be smart, be patient, be disciplined with your process, and you will be successful. Tomorrow is a big day, and I think we might see some nasty day in which we start to sell off, and then at the end of the day, we just destroy all options, and then we have key structure down here for all the people that was patient to really have a move higher for long-term investors, banks, and things like that. I think this is still a little bit of a pullback. We are still in a daily range in which we might see some support. We are not like this down here, So we have to be cautious and to really see what we are dealing with. I already marked the inverse fair value gap already today. It was quite clear that we were not going to go higher. So we have an inverse here. So at some point, upping the liquidity, going higher here is going to be the battle of rejection of all-time highs again. But first, the liquidity down here, bounce, structure, and maybe a reversal with big investors, big money, big players in our side, longs. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over yet. Don't ruin your day today. Today is super red. It's the broad market, the entire market is almost red everywhere. So be smart, be patient, be disciplined, manage your risk, and live to trade another day. Stay safe, everyone, and see you tomorrow.